Yesterday, Wednesday, the markets held up pretty well during the day. The Dow was off 100 points. The Nasdaq was flat most of the day. However, in the final 30 minutes, 45 minutes, the market sold off hard, which left a chart pattern showing a doji followed by a bearish candle closing below the T-line, bringing you back into the middle of this trend channel. That would have been pretty much a bearish signal, or telling you there was going to be a temporary downturn, to whatever we could convey would be a support level, which would be the bottom of this trend channel, which was right about, not too far away from where the Dow closed. This morning, when we got up and saw that the weakness was still there, strong, that was a good implication that this was not going to hold, yet there was nothing down here that you could resort to say, well, that'd be the next support level. There was nothing there. This leads to the conclusion that if this is wave 1, this is wave 2, that wave 3 may be in progress with the same magnitude as wave 1. The Nasdaq had somewhat the same scenario, where you had kind of almost a dark cloud, not quite, but the sell-off during the day, the Nasdaq held up pretty well right here at flat, even positive when the Dow was trading down negative. But it sold off in the final 30 minutes, closing below the T-line, once again making this the trend channel the next target, which again was not that far away. However, when we saw the real weak signals, or the pre-market futures this morning, told us that this is probably not going to hold up. Once again, wave 1, wave 2, wave 3 probably now is in progress. This instigated closing the long positions. Part of this right here should have instigated closing long positions that weren't showing strength, and potentially adding short positions on any weakness the next day, which is what should have happened today. Our recommendation on SPRD, which had been working out quite well coming out of the fry pan bottom, had some toppy signals, which it had some toppy signals before, but remember, as long as it did not close below the T-line, we were all right. But we had some toppy signals, and the Dow and the Nasdaq not having any target other than the bottom of the trend channel told us that if this traded below the T-line, it was time to get out. Now notice today it was a indecisive day, so we got out, which is the right thing to do, below the T-line. But it also gives us the opportunity that if it opens positive and starts trading back up above the T-line, we can always buy back in. And the visual benefit of candlestick analysis is that in our recommendation of DMND, after it gapped up out of this little fry pan bottom doji gap up, that even though it opened lower today, which would have warranted probably closing out the position, we could see that it was almost immediately started moving positive. Told us valuable information right from the get-go, that once they opened it, the bulls were still around. So this was not a bearish chart based upon the price being down 75 cents on the day. This was relatively bullish, telling us there were still buyers in on a day like today. That'll be it. We'll see you in the chat rooms.